Hello guys, and welcome back to the channel again. So today we're at episode 10 of our series Trading for Beginners 2026, and our topic today will be support and resistance. So jumping directly into this new concept to explore it together, and starting by a simple definition for each part of our new concept, starting by support, that is called demand zone as well. So basically support is a level where price previously found buyers and moved up. So to see it in a real chart example, let's explore this graphic together. Price started from here, from the left, and then went, made a new high, and then retraced, made a low, and from that low it kept making new highs, and after a while it retraced, tapped into the zone where it retraced earlier, and then went again to make a brand new high. So basically this zone is called a support zone or a demand zone. Why? Because here market was already strong and was bullish. It was meeting new highs and prices kept developing and improving and getting higher. But at some point, bears went in at this exact line here that I marked with red. Bears came in and made price retrace a little and prices go down. But then bulls entered at this exact point that I am showing you here and made market go high again. So basically here we say that this zone is called a support zone, and it means basically bulls went here to push price even higher. So in the future, we're going to mark out this zone and pay attention to, because bears position themselves in this zone. So basically, they might have awaiting orders for the future if market that retreats and came back to this zone in order to fill them and make it go higher again. So basically, that's the use of a support zone, and that's what support is. Now, going to the second part of our course today, which will be resistance or supply zone. Resistance is a level where price previously found sellers and moved down. So going to the graphic again, and we have our same example here. After market made this high and retraced, went to the support zone, collected liquidity orders, like the limit orders, awaiting orders here, and then went high again. It tapped at the same exact zone where price retraced from earlier, and the exact zone where market changed its direction and its trend. If you don't understand what a trend is, I advise you to watch our last video, which was episode 9, and you will be sure that you're gonna understand what a trend is and what is market structure. So going back, so here market after retracing into the support, it went and tapped into the same level where it retraced from the last time, and again it failed the awaiting limit orders here of bears and then went down. So basically this is the use of a resistance level and this is the use of a support level. Now going to, I hope everything is clear now, the difference between a support and the resistance. And let's go to the second part. What's their use? So what is the use of these zones? Traders use support and resistance levels to mark important areas on the chart that they need to pay attention to, because these zones often gives strong reactions. Just as we saw here, it's the same thing. Some traders also use support and resistance as a full strategy. They position themselves based on these levels and decide whether to buy or sell depending on how price reacts. So basically, there is a type of traders that have support and resistance as their main strategy. So what they do is they mark out a level where market reacted from the first time, maybe reacted from the second time as well, so they can confirm if that level is valid. So they wait for it until it hits the third time, for example, like this, and then they take their possessions from here. Let me show you. So they take their possessions from here. for example. They take it from this level and they make their stop just below this zone and their target at the next high like this, or for example, they just keep it and keep retracing their stops. So basically there is this type of traders. There is a type of traders as well that was waiting for this zone to be touched as well, and they went and put their positions here, a sell position and their stop here, and then they got their TP at this zone as well. They take profit, but eventually not all the trades are a winner. So basically they got stopped out and the bulls were stronger. This is an example. Now to our last part of this course, let's go and see a real chart example. So what I got here, I got MNQ chart at the 1 hour time frame, and I want to show you a strong demand zone, a strong support that I saw at this 1 hour. So basically, market, as I told you, was going higher, but at this exact point here, it retraced a little, and from this exact point, it went and made a high, and then it retraced and made a new high. So basically this was the strong point where bulls took off and controlled the market. So what are we marking? We're marking this little zone here, and we're expanding it to see how market reacted from it. Let's mark it with a green color indicating bulls, and let's actually name it. This should be named, sorry, it doesn't want to. Okay, no problem. So basically this is a support. We see here market went high, tapped again. This is the second time that it tapped this zone, and then went and made a new high and tapped for the third time and went in and made a new high and then retraced to this zone again, and then went, made a new high and then retraced in this wick, failed to make a new high, went down to this zone, retraced ranged a little, and then went and failed to make a new high again, and then broke this zone, and this zone is not valid anymore because it has been breached. So how many positions can a support levels trader be taken here? We got, first of all, this one. Let's say he waited for the third one. So basically this is 1, this is 2, and this is the third one. Let's say he took his position just from here and made his TP here. So that would have been a 2.3 hours. And then after a while, he saw market went down and tapped his zone again. He took another position from here, another TP at the recent high. That's a 2 RR again. For these two, it would have been failed, but let's just focus on if this zone is working or not. So basically, as a strategy, every strategy has a win rate. Sometimes it fails, sometimes it wins. So support and resistance is one of the fundamentals of trading. And as you can see in this example, we saw a valid support level. Now let's go ahead and see a resistance level. I got here gold on the 1 hour time frame. As you can see here, market, after making this new low here, it went up and tapped into this level and then gave this nice reaction, and then tapped the second time and then gave this very strong reaction where it made a new low. So basically we got from here our level marked. It came again after making this low and tapped for the third time, went down, failed to make a new low, retraced for a fourth time, and then dumped very hard until this level. After this level, after this huge dump, what market What gold did is it retraced another time. I don't know if it's the fifth or sixth time, and then, as you can see here, went down again and made a new low. So basically, this resistance level is very strong, and the bears are controlling it in power. So let's calculate how many positions a trader could have taken from this zone. We got this first zone, first trade here, TP at this low. Sale didn't got stopped out, and TP was hit here. And then it was a 4 RR trade, which is huge. And then another position here, another stop loss at this high, and then a TP at this low at 6.6 Rs, and again it's a TP. And from this level, market never came back to the zone. So we can see here a very successful and valid resistance level. So this was all for our lesson today. I hope you guys enjoyed it and understood what support and resistance levels means. And if you got any questions or any recommendations for me, please don't hesitate to write them in the comments. See you guys tomorrow and have a great ending of the day.